It's good to have you on. I mean, you're watching the 400 level like I think most people are at this point. Got awfully close, but here we've bounced a little bit. Where do you see it heading from here?
Hey, Scott. So, it's when you're talking about support and resistance, it's never a fine line. I think the 400 to 410 level is pretty significant. If you think about the last few months since it had that gap up on the blowout earnings in May, it tested this 400, 410 level in late June. It tested it in mid-August, again in late September, and again here we are in late October. And so, typically double bottoms can happen, but once you start testing a given level more than 3 or 4 times, odds are ultimately it does succumb. And the issue in Nvidia is there's this big gap in both price and volume. So, because it gapped up so swiftly and had that runaway move this summer, there wasn't a lot of volume that transacted between, let's call it 300 and this 370 level. So we think, 400 is important. Once it breaks 370, there's a clear shot to that 200-day around 350. And that's kind of your 10% downside. But ultimately, we even can't rule out a complete round trip of that earnings gap from May, which would get you back down to around 306.
Kind of dicey, though, to make a call like this. Now, I know, you look at the charts more than anything else, but nonetheless, ahead of an earnings report that's coming in, reasonably short order, it's dicey to say the least.
Well, Scott, if you recall, the last time we were on set with you was the day before Nvidia reported in August, and we felt that at that point it was universally loved, and the odds favored maybe a sell the news reaction. And so, here we are down about 20% from the high that it made in mid-August. And I think, it's not so much about the earnings report, it's about the trend and the momentum. And weekly momentum for Nvidia and for the semis broadly has been on a sell signal on a weekly basis for quite a while now. So, that's not going to change in the immediate term. So I think trend and momentum favor the downside. It could be a situation, look, November, I think they report November 21st or something. So that's still about 3 weeks away. It could be down to the 200-day before that point, and then the risk reward might be a little more favorable. But I think here and now still favors some caution on the name.
What about megacaps in general? I mean, I guess now, presumably, you must think that those are going to break down as well. If not, it's not just going to be Nvidia.
Yeah, look, this is something we've been talking about, all year long, really. And, throughout the summer, the megacaps, significantly diverged to the upside, but you never really got any sustained confirmation by smaller mid caps or the average stock. To be honest, the average stock peaked February 2nd and never really reclaimed that level. So we continue to see evidence that more and more of these big cap names are playing catch down to the average stock. Even within the Magnificent Seven, you're seeing some, Tesla's actually down 10% from the October 2022 lows. You've seen other names kind of falter. So I think you're continuing to see this thinning of the leadership stocks, and ultimately, as bear markets unfold, that's when you get the last man standing, if you will, which was the crux of our note. Come after the king, you best not miss, and that's really Nvidia. It's the best performing stock in the S&P 500 year to date and from the October lows. So we think it's probably the last man standing. Ultimately, that brings the NASDAQ 100 down with it as well.
Well, what about the S&P? I mean, we're at 4,200, and now we enter what is historically the strongest month of the year, followed by the second strongest month. How vulnerable, then, does that leave the S&P, and are you writing off the chances of a late-year rally?
So we actually put out a note this week, and we do think the odds actually for November to finish higher are decent. We're down 3 straight months. We haven't been down 4 straight since 2011. We haven't been down 4 straight ending in November since 1946, meaning August through November have not been down consecutively, in over 60 years. So odds do favor an up November. The issue is we don't think it's a straight line. We don't think you start off November 1st and go to the upside. We think there's unfinished business lower, maybe 3950 to 4,000 in the S&P. I think there's still too many people banking on this year-end rally. I think you got to shake out a little bit more of that optimism, and that could be a nice setup as we get into November.
So let me have you answer the question we've asked our viewers to answer as well. We end the year on the S&P below 4,200, or are we between 42 and 4,400, or above 4,400? What do you think is most likely to happen?
I think you probably are ending below 4,200. Again, November could be positive, but if you're if you're trading down to 39.50, 4,000, that's going to be tough to reclaim 4,200 in our view.
All right, we'll talk to you soon, Jonathan. Thank you, Jonathan Krinsky, BTIG, joining us.